Hello investors and traders, and welcome to the weekly market report with the Market Guys. I'm AJ Monty. This is a one-year daily candle chart of the Russell 2000 index, and I left my lines on the chart from last week's report so you can see once again how accurate these candle charts really are with regard to forecasting the markets. Now as I zoom in here, you'll see that this diagonal line is what I drew last Friday, and I said that the markets would pull back from this resistance high, and that's exactly what has happened. So what I'm going to do is I'm going to erase this line, and I'm going to keep this one in place because I think that the markets are still going to pull a little bit lower and eventually pull back to this fan line like I've been forecasting for the past 3 weeks. So that's a Russell 2000. If you look at the Qs, this is the Nasdaq market basically, it's the power shares, you'll see that this market hasn't pulled back as much as I thought it would, but it did exactly what I said with regard to resistance. The resistance here from back in March of this year held as resistance, and we see this long shadow above that red candle right there, and that tells us that the sellers are still moving in. So I do believe that the market here in the Nasdaq will pull back a bit, but I'm going to erase this line and I'm going to draw a new line from this starting point right here. I think that we're going to pull back to test this support level. Eventually I think we'll go much lower, but this is the newly established support level from back on March 27th. And this is my forecast, so keep an eye on that. The diamonds is the Dow Jones Industrial Average ETF. You can see here that my forecast line is once again accurate. We came down almost to my target point here on Monday, and then we bumped our heads up against that 20-day moving average, and I think that moving average is going to hold as resistance. So what I'm going to do here is I'm going to erase this forecast line from last week, and I'm going to draw a new forecast line which is going to be looking just like that. I think that we're going to actually drop below that low next week because the volume is really starting to drop here, and that tells us that the buyers are losing some of that momentum. Now if we look at the spiders, it's ticker symbol SPY. This is the S&P 500 ETF. We hit that line within pennies of my target on Monday. We had a bearish engulfing pattern on Wednesday. We have a doji here on Friday. All of these candles lined up in a row like that are indicating sellers are very present. So I'm going to erase this line right here from last week's report, and I'm going to draw a new one just like that. Pretty easy because the markets are looking very similar across the board, and the main indicator that I use for forecasting is of course the VIX. It's ticker symbol VIX. This is a leading indicator that measures the volatility S&P 500, and I said that the VIX would start to creep up, and this was what I drew last week, and look at how perfectly the VIX is starting to move up along that line. Now today, Friday the 7th, as I'm doing this recording, you can see that we have a higher high and a higher low on the VIX, which is telling us that the uptrend is still in force. So since Wednesday, we've been having higher highs and higher lows. And I think that the VIX is going to continue to track on that line from last week's forecast. So there's nothing I have to do there except to leave it in place. And remember, the VIX is a contrarian indicator. So if it's looking bullish, that means the S&P is most likely going to pull back in a bearish move. Now, if you're interested in learning more about what we do at The Market Guys, just go to themarketguys.com, and you can click on the video tab right here at the very top. There's a series of hyperlinks. You just click on that one right there, and that will bring you to our video library. One of the things that I feel is most important out of this whole library of videos is the 1% rule. If you know how to manage risk and minimize your risk to 1% of the value of your account, then you're going to preserve your buying power and not subject yourself to a catastrophic loss. So risk management is the cornerstone of what we teach at the Market Guys, and from there on out, it's just a lesson on technical analysis. So just stay tuned to the Market Guys. Follow each and every week in the weekly market reports, and you'll learn something new every single week. So have a great weekend, and we'll talk to you soon. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our trade alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.